just kind of take some stock of the whole conversation a little bit, because you've been very bullish for a while, and you've been right. Does 2 months cause you, we're kind of basically, let's say the S&P is unchanged, the NASDAQ's down a few percent, we're 2 months into the year, there's a lot of uncertainty about, we talked about immigration, tax, tariff, geopolitics, the list goes on and on. Things are likely to cool out a little bit at some point, right? On that sort of front, we get some of that uncertainty out of the way. How are you thinking, just if you want to put it in a nutshell, the economy this year? It sounds like you think rates should go lower. You think inflation is probably not going up much higher. And then generally, how are you thinking about the stock market?
I mean, the market is trying to price in a lot of these uncertainties right now. And so it's understandable that we're churning. But investors don't want to become too bearish, because the market sentiment, and it's already measurable, like the AAII survey, which is what we've used for the last 14 years. I think it's the best retail sentiment survey, is at the same bearish levels it was in the fall of 2022. So retail sentiment, and it's probably because there's been a ton of margin calls last couple weeks, is at the levels that were at the depths of that recent bear market. So the investors view this as a crisis when it's really a growth scare. So to me, I think there's a good chance we're making our lows for the first half, like this week. And
like down 5-6%, you mean?
Yeah, it could be.
Yeah.
I mean, the only thing is I'm not that optimistic about the job picture for the near term. So maybe that's one last leg. But the reality is that a lot of bad news has gotten priced in. And, on the flip side of this is that the closer we get to stall speed, the more the Fed has to get off neutral. And I think the White House will have to back off talk of things that could be hurting the economy.
Do you think we're going to get a 10% pullback in the S&P this year? Because we did have one July highs to the August lows, and things kind of accelerated into that August low, and it felt a little panicky. And again, since then, we haven't had too much panic. I think that move in December after the Fed meeting, that felt really bad. But we were not making, it didn't take long to make new highs.
Well, I think that July to August was essentially, I would say, Fed driven.
Yeah.
And so that makes sense. Because it felt like either the Fed made a policy error or the Fed turned hawkish.
Right.
But either way, we had a big drawdown. Will that happen this year? I mean, yeah, I think it'll happen. If I'm guessing, it's more in the second half. So I think this is just a flesh wound right now.
Dan Ives decided to go all out and give Nvidia holders advice to combat the oncoming tariffs by Donald Trump. Among the whirlwind of numbers and percentages, Nvidia, Microsoft, Palantir, Alphabet, Amazon, Salesforce, Apple, and Tesla find themselves in a surprising spotlight. While the market dances around a turbulent economic landscape, these 8 giants might just be the hidden gems amid the chaos. Stay with us as we delve into why Dan Ives thinks these companies should be on your radar. Welcome back, everyone, to Investocracy.
How much upside do you think if we get a lot of those headwinds kind of out of the way, a lot of those uncertainties we just talked about? Let's say we get the base case on that kind of pro-growth agenda that a lot of folks were excited about.
Let me be clear why I don't think it's 10%. Because let's say that some policies implemented that would cause the U.S. stock market to go down 10.
Yeah.
I'll guarantee you the rest of the world's down 30.
Right.
So will Europe and Canada, Mexico dig in and we'll just power through this? No, they're going to capitulate. So the reality is that this brinksmanship probably means the other side caves in. That's why I don't think
But it probably takes longer than expected, because I think we keep throwing these threats out, but we don't actually put any requests for concessions out, right? There really aren't that many right now. I mean, it just seems like it's a bit of a tit for tat. And I think the other side is just kind of sitting there and they're taking the volleys right now because they don't really know what they want.
I'm not an administrator, so I don't know what kind of back channel talk there is. I'm sure there is, so I don't have an answer.
Well, listen.
Investors wonder if the recent Trump moves, especially with the tariffs, will lead to a peak in uncertainty or present unbeatable buying opportunities. Donald Trump's victory speech fueled hope for a robust domestic trade scene. Yet for NASDAQ, it has been a wild ride of gains and setbacks since his inauguration. Yet, behind the scenes, savvy investors are eyeing the situation as a chance to buy the dip, particularly in the realm of artificial intelligence. But before going on with the video, are you into cryptocurrency? If so, check out our second channel, Investocracy Crypto. We bring you breaking news, expert analysis, and the latest trends in the fast-moving world of digital assets. Whether you're a seasoned crypto investor or just curious about the future of finance, we've got something for you. Click the link in the description to subscribe to Investocracy Crypto now. Don't miss out and stay ahead of the game. Now, let's get back to the video.
In Megacap Tech, let's bring in Dan Ives, Wedbush Securities Global Head of Technology Research. And Dan, that's exactly where I want to start with you, because there had been some speculation. I mean, we expected we were going to get a chip-related announcement from President Trump this afternoon, and that was really when we saw the speculation that maybe it's going to be increased export controls on the likes of Nvidia and some of these advanced, semi-related products. Instead, we got this $100 million investment from Taiwan Semi, but that fear is still out there. And it's kind of interesting because we have export restrictions on quite a few countries, but apparently not Singapore.
Yeah, and I was just there on Friday, right? So I could tell you the sense is that these export controls, it's not going to be really constrained to ultimately Singapore. And I think the fear here, and I think you're seeing on the Nvidia sell-off, is that this is going to be a huge ripple effect. It's going to be harder and harder to get those chips. That's something, even though there's the China piece, it could have a much broader impact across the region. I think bark's worse than the bite. I mean, as someone, in Asia for 2 weeks, I think it's when I get the fears, but I don't think this is something that's really going to be as much of a restrictive factor, despite everything we saw today.
Do you think it's deep-seek concerns that are spurring this next wave, potentially, of regulation? And I guess perhaps just as importantly, has the train already left the station when you look at homegrown chip development in a place like China?
Look, I think DeepSeek, that was a shot across the bow because I think everyone recognized, okay, they didn't do this in the basement with no chips. And it comes down to if they use next-gen NVIDIA chips, what does that mean? And I think, look, the broader fear, especially that you see in the Trump administration, is, okay, we got restricted more and more. So I think what you're starting to see from an investor perspective is, okay, what does this mean for NVIDIA? Second derivatives. Is this going to crimp the supply chain? Now, we disagree. I think when it comes to tariffs, we've seen many times, this is one, it's going to have an impact, but I do not believe it's going to have such a pronounced impact. I think it's being factored in here in terms of supply chain. Still, 15-to-1 demand to supply, even when it comes to Blackwell.
Well, okay. Dan Ives has been sharing vital insights into AI's strategic importance. His latest analysis brings us to Nvidia, Microsoft, Palantir, Alphabet, Amazon, Salesforce, Apple, and Tesla, key players whose AI-centric strategies could spin these tariff tremors into symphonies of success. But before going any further, if you made it this far into the video, thank you. These videos take a lot of effort and time to make, so if you enjoyed them, please hit the like button and subscribe to the channel. This goes a long way in helping us grow. That said, back to the video.
Bark is worse than bite. But still, a bark can be pretty bad if it hurts sentiment, right? If it sort of puts a wet blanket on the party, has an impact on valuation. At what point does it start to do that? And do you have to, if you're an AI investor or even NVIDIA investor, have to get less bullish?
Yeah, look, I mean, no doubt you're going through a lot of turbulence here. From a sentiment perspective, you're seeing this stuff. Then it becomes self-fulfilling prophecy. But what I'll tell you is it comes down to just demand. Do we see any changes in spending? That demand's going to continue to be there. And I think it's there's only one chip in the world that ultimately could fuel this. I get we're going to go through this, but in my opinion, these are opportunities, not the time to run for the hills. I think when you look at it in terms of tech winners, if you look over the years, it's period like this in these white knuckle periods that you own the winners, you own the NVIDIAs.
Well, speaking of a company that's been through cycles like this, Apple, right, on the client side with AI versus on the data center side, it's the biggest premium consumer product company on the planet, and boy, could things get more expensive, iPhones get more expensive under these China tariffs. How much of a threat is that for a company that has some different ways to sell phones, has a lot of cash to do some subsidizing of the debt necessary to help consumers do that?
Yeah, I think we believe there's a 90 and 95% chance that ultimately there's loopholes that they're not going to really be impacted in terms of iPhones from the tariffs. I think very similar to what we saw in 2019. Cook, it goes back to 10% politician, 9% CEO. I think they could absorb, if they actually had to, some of these tariffs with no sort of passing that through to consumers. The bigger issue is if this lasts till September, until actual iPhone 17 production, that's where it gets a little more, I think nerve-wracking. But as of now, we believe that there'll ultimately be loopholes that Apple is not impacted. And that's why also you're seeing the stock not really reflecting too much negative, because the investors are kind of reading through that.
Only 10% politician?
Maybe 50, I'd say 10%, maybe the last few weeks, 20, 25%.
Despite the immediate upheavals, the foresight of the companies that Dan Ives recommended reinforces the narrative that investment in AI will spearhead profound transformations in business operations. While tariffs paint a temporary gloom, these strategic tech titans are poised for a brighter future. But what do you think? Share your thoughts. Finally, if you would like to know what companies like Nvidia have been up to these past few days, go ahead and click on the next video on your screen. See you there.